This is the Equity Management Academy Mean Reversion Trading Weekly Podcast for July 31st, 2022. Gold. The monetary system and currencies are in a state of chaos. Summary. The Fed yesterday confirmed that the Fed was going to raise interest rates 0.75%. The 10-year note is trading below 0.75 of a point at 269, which makes the S&P and stocks undervalued. With higher interest rates, third world debt is at grave risk, as is anyone who is heavily in debt to invest in stocks, commodities, real estate, or anything else. We are reaching a point where we are going to place real value on real assets, such as precious metals. Fundamentals. The Fed yesterday confirmed that the Fed was going to raise interest rates 0.75%. The 10-year note is trading below 0.75 of a point at 2.69, which makes the S&P and stocks undervalued. Therefore, we do not recommend shorting the stock market. We have been telling our traders over the past few weeks that we are looking for a bottom confirmation. Since March 2020, we have seen the 10-year note rise from 0.33% to 3.5%, which the Main Street media has not focused on, if at all. That was a major historic move in terms of the cost of money and the effect of borrowing on everyone who was borrowing at the old, almost free money levels. People could borrow at almost zero interest rates and invest in stocks for a major return. Then interest rates rose, which ended that ability to borrow cheaply and invest in a roaring stock market. With higher interest rates, third world debt is at grave risk, as is anyone who was heavily in debt to invest in stocks, commodities, real estate, or anything else. We are just beginning to see the consequences of the rise in interest rates. The euro is in trouble, now at parity with the US dollar. Everyone is selling other currencies and buying dollars. It is a flight to safety, but it doesn't mean that the US dollar is very healthy. We could have another credit crisis. It is unlikely the Fed will raise interest rates again on top of $30 trillion in debt in the U.S. If they raise too much, defaults could crash the economy, and the Fed itself has to pay more interest on its borrowing. The yield is now inverted, with short-term and long-term rates inverted, which indicates we may be heading into a recession. The market has already discounted another rise in interest rates. If you hear the media talking about something, then it has already been taken into account by the market. The quarter-point increase did not crash the stock market because the increase had already been factored into prices. The Fed moves appear to be bullish for stocks as the market discounts the rise of interest rates and deal with the possibility that the Fed may have to do a U-turn and start to lower rates. The Fed may even have to print more money and create more stimulus. All of the hawkish talk is an attempt to manipulate the market without the Fed having to do anything. Now, the Fed is having to actually act. The market is already discounting even another 0.75% increase in rates, although we would not be surprised if there was a pause in interest rates, hikes, or even a lowering in rates. If that happens, it would be extremely bullish for stocks and commodities. The monetary system and currencies are in a state of chaos with all of the printing of money and stimulus. It has destroyed the purchasing power of all currencies. We are reaching a point where we are going to place real value on real assets, such as precious metals. Standard deviation and mean reversion. Gold. The Fed announced that they would raise interest rates 0.75 of a point, and today, July 29, 2022, the market is reacting. It has been a quiet opening today. The E-mini S&P is up 36.50. The metals are pulling back a bit after running up yesterday. The December gold contract hit 1784.60 at about 12 a.m. last night. The standard deviation of the market, which the variable change in price momentum indicator, VCPMI, identifies, tells us when we can expect a reversion to the mean to occur. The market hit a sell one level of 1782. The VCPMI identified that from that level, the market activated a short trigger at 1 a.m. with a target of the weekly sell 2 level of 1774. Now the daily and weekly short signals have been activated with a target of 1766. There was a bit of profit taken this morning after the phenomenal rally yesterday. We are recommending that our traders trade from the long side. The market appears to be a little overbought. NASDAQ. The NASDAQ continues to hold on to its gain too. The market hit 12,948 last night and we saw a bit of a reversion unfold. It hit 12,774, which was the VCPMI target. It reached the weekly standard deviation and then reverted back from there. 12,908 is a 32.8% Fibonacci retracement from the high we saw last week. The weekly and daily targets run up to about 13,273. There is a harmonic relationship between the weekly and the daily target, so the market is highly likely to hit that level and then revert back down toward the mean. We recommend taking profits off the table if you are long. Now, we are looking for a spike move into the 13,273 area when we will take more profits. Strategy. Equity Management Academy CEO Patrick MontesDeOca said, I am recommending going long in the market, especially in sectors that have been battered by all this talk about rising interest rates. End of quote.
Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, EMA2trade.com, or listen to any of our previous episodes.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our variable changing price momentum indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.